So, in the middle of all the news lately, something pretty wild popped up. The idea that the USA is actually thinking about creating its own sovereign wealth fund. We're talking about a massive national investment account, basically a giant savings plan for the country.
And at first glance, you might think, yeah, a national savings account, what's not to like? But when you start to dig into what economists and financial experts are saying, the general feeling is that this whole idea is, well, kind of silly. So, what is it? A stroke of genius or just a really bad idea? Let's get into it.
First off, who else is doing this? Well, as you can see, we're talking about some major global players here. Countries like Norway, China, and the big oil-rich Gulf states have built these funds into absolute behemoths with hundreds of billions, sometimes trillions of dollars. I mean, think about that. These aren't just savings accounts. They're huge tools of financial power, investing in everything and shaping economies all over the world. Okay, so to figure out if this plan for the US makes any sense at all, we first have to understand how these funds are supposed to work. And to do that, you really have to look at the one country that absolutely nailed it. So real quick, what is a sovereign wealth fund? At its core, it's just a government-owned fund that invests public money into assets like stocks, bonds, and real estate. The easiest way to think of it is like a giant national retirement account. The whole point is to grow that wealth for future generations. Right. Now, whenever you hear economists talk about these funds, one country's name always comes up: Norway. Their fund is, without a doubt, the gold standard. What they did was brilliant. They took all this incredible wealth from their oil and gas and turned that physical stuff into long-term financial wealth. So why is Norway's model the one everyone copies? Well, it's a few things. The fund saves that oil money for a future when the oil runs out. It also acts like a giant cushion when oil prices go crazy. But maybe most important, it prevents something economists call Dutch disease. That's when a flood of resource money actually ends up hurting the rest of your economy. By investing that money abroad, Norway avoids that trap. It's just a masterclass in thinking ahead. Okay, so if Norway built its huge fund on oil, and the US is now the biggest oil producer in history, this should be a slam dunk, right? Well, this is where we run into the first, and honestly, the biggest problem. To have a sovereign wealth fund, you kind of need the wealth. And the US government is missing that key ingredient. Just take a look at this number. In 2023 alone, the US cranked out over 827 million metric tons of oil. That makes it the top producer in the entire world. So you'd think the government would be absolutely swimming in cash from all that, right? Plenty of money to get a new fund started? But here is the fundamental, game-changing difference. In Norway, the oil belongs to the state. The government taxes it heavily, and that money goes straight into the fund. In the US, it's the total opposite. The oil is mostly owned by private companies on private land. So instead of the government getting a huge tax windfall, the industry often gets government subsidies. All that profit goes to corporations, not into a national savings account. And believe me, we are not talking about small amounts of money. Tax breaks for things like intangible drilling costs are set to cost the government $13 billion over the next decade. Another tax credit costs almost the same. So instead of being a source of cash, the oil industry is actually a net drain on the government's potential income. This whole situation gets even stranger when you remember that the US is already spending way more money than it brings in. So with huge deficits and talk of even more tax cuts, this analogy just hits perfectly. Starting a national investment fund right now is, well, it's really weird timing. So if there's no extra cash lying around and no big pot of oil money to dip into, how in the world could the US even fund this thing? Well, there's one idea being floated. It's controversial, it's high stakes, and it's a real gamble. And that gamble relies on America's one undisputed financial superpower: its credit. You see, US Treasury bonds are considered pretty much the safest investment on the planet. That means the US government can borrow money cheaper than almost anybody else. And that unique power opens up a very different and much, much riskier path. So here's how it would supposedly work. The US government borrows a bunch of money by selling bonds at a low interest rate, let's say about 4.5%. Then it takes all that borrowed cash and plows it into the global stock market, hoping to get a return of, say, 7 to 12%. The plan is to just pocket the difference between the two. Simple, right? But let's be really clear here. This isn't a sovereign wealth fund like Norway's. A much more accurate name would be a sovereign leveraged investment fund. And that word leveraged is key. It means you're investing with borrowed money. And as anyone who invests knows, leverage makes your wins bigger, but it makes your losses catastrophic. And that brings us to the giant flashing red light, the massive risk. What happens if the stock market tanks? Those great returns could disappear or even go negative. But that debt, that 4.5% interest, that has to be paid back no matter what. A really bad market crash could put the stability of U.S. debt and even the dollar itself at serious risk. Okay, so if the classic model is impossible and the alternative is incredibly risky, that leads to a huge question. Why? Why is the government even talking about this? What are the real reasons behind this whole idea? So what could be driving this? There seem to be a few theories. One is just geopolitical posturing, wanting a big fund to compete with rivals like China on the world stage. Another might be as a tool to prop up asset prices to make the economy look stronger than it is. Then, of course, there's plain old domestic politics. A national wealth fund sounds great on the campaign trail. A more strategic reason, though, might be to protect long-term projects like green energy from being canceled by future administrations. So we've looked at how it's supposed to work, why the U.S. model is broken from the start, the risky alternative plan, and the possible motives. So after all that, what's the verdict on this thing? And let's be really clear, sovereign wealth funds are not a bad idea on their own. In the right situation, like if a country has a huge budget surplus or tons of resource money coming in, they can be an amazing tool for long-term prosperity. But for the U.S., right here, right now, the timing and the circumstances are just completely wrong. Which brings us to what might be the single best analogy for this whole situation. The U.S. economy has these really complex issues that need precise, careful solutions, a scalpel. And a giant debt-fueled investment fund is the exact opposite of that. It's a mallet. And trying to perform surgery with a mallet isn't just a bad idea, it's a dangerous one. It is simply the wrong tool for the job. So that leaves us with one final big question. If this fund actually gets created, what does it become? Does it turn into a serious strategic tool for the nation? Or does it just become a multi-billion-dollar political pet project that fizzles out and is forgotten in a few years? I guess only time will tell.